The price of Bitcoin is currently at a point where it is anticipated to quickly rise to crucial levels. On-chain measures also point to the prospect of an increase in buying pressure, which might lead to a full-fledged bull run provided certain obstacles are overcome. But which obstacles are these to be overcome? Hello and welcome back to Crypto Cash Channel. Do you think we might experience a bull run this year? What does the technical analysis say? Let's find out. But first, before we go on, a sub to the channel would be very appreciated. Comment, share the video, and don't forget to leave a thumbs up for the video. So, let's get into it. Well, coming off its all-time high in November, a $100,000 Bitcoin price was easy to anticipate late last year. With Bitcoin's steep decline since then, the prediction game has become much more difficult. The most ardent crypto doubters anticipate that Bitcoin will crash to $10,000 by 2022, but a middle ground could be that Bitcoin can still reach $100,000, as many experts projected late last year, on a slower schedule. Many experts are hesitant to estimate a figure or a date, preferring to focus on the upward trend in Bitcoin's value over time. With the $100,000 barrier in sight, investors should expect a very sustainable rise in Bitcoin's long-term value driven by organic market activity. Anyone who follows Bitcoin will recall the bull market of 2017 when the cryptocurrency hit a high of nearly $20,000. The buzz surrounding initial coin offers and investors hoping to profit in the short term propelled most of that increase. Companies acquire funding through initial coin offerings by issuing new tokens to investors who become backers of a blockchain project. Bitcoin's price plummeted in early 2018 after the ICO bubble burst. Market watchers predicted that cryptocurrencies would face some turbulence as a new market and business and that it would take time to build confidence. In 2019, Facebook revealed the Libra cryptocurrency project, which fueled yet another Bitcoin rise. Bitcoin's price fell to $6,000 and $7,500 in the second half of the year after some supporters of the Libra project dropped out and Congress questioned CEO Mark Zuckerberg about regulatory issues. As stimulus packages intended to boost up economies during the COVID-19 pandemic made their way into fringe markets like cryptocurrencies, Bitcoin hit a new high in 2020. There were, however, indications that several sorts of cryptocurrencies were gaining public acceptability. Leading investors announced that they were buying Bitcoin as a hedge, while payment companies like PayPal announced that users would be able to utilize Bitcoins. However, the volatility is nothing new, and it's one of the reasons why experts advise new crypto investors to be cautious when committing a portion of their portfolio to cryptocurrency. Bitcoin has risen in value as steadily as any other cryptocurrency on the market over the years. It's only natural for Bitcoin investors to wonder how high the currency can rise. Unfortunately, the price of Bitcoin is exceedingly difficult to forecast, and it is considerably more vulnerable to market forces than other asset classes. While technical indicators point to a slight uptick in Bitcoin's price, on-chain measurements point to a much brighter future. Supply on exchanges and net exchange position change are two of the most unduly bullish indexes. The first metric tracks the amount of BTC held by centralized entities and can be used to estimate selling pressure if things go bad. A rise in this statistic is usually followed by a sell-off. However, since March 2020, this indicator has been on a downward trend for Bitcoin. The total number of Bitcoins held on exchanges has dropped to 1.91 million. The lowest level since December 6, 2018, indicating that investors are confident in Bitcoin's performance. Something else is the exchange net position change indicator, which tracks the 30-day change in Bitcoins held in exchange wallets. Nearly 100,000 BTC have departed exchanges since March 2022. Furthermore, in BTC's decade-long history, such a large outflow has only occurred 5 times. All of this suggests that investors are betting on the big cryptocurrency's long-term performance. The supply distribution by the balance of addresses reveals a similar bullish prognosis for Bitcoin price. From 2.93% in December 2021 to 3.47% as of today's video, this index shows a net increase in whales holding between 100,000 and 1 million BTC. This increase in accumulation is the most visible evidence of institutional investors' intentions. A popular on-chain analyst with the screen name TechDev argues that the market has been in a year-long retracement and that an impulsive is likely. He also adds that major purchase signs are appearing across the board. The bullish flip and retest of the 100-day moving average is the first and most evident indicator. A similar configuration was witnessed prior to the commencement of the 2017 bull movement, lending credence to the current signal. Furthermore, the market capitalization of altcoins has surpassed the exponential moving average (EMA) ribbon and is currently retesting it. A similar setup occurred in 2017, just before altcoins experienced a massive rally. In addition, the dollar index (DXY) is approaching a local top, which was a common pattern before the start of the 2017 rally. There is bound to be a retracement in DXY, which will pave the way for capital rotation into hard assets like Bitcoin, given the Federal Reserve's hands-on approach to raising interest rates. Overall, the Bitcoin price appears to be in the right position to begin a major bull rally, and on-chain indications are actively supporting this view. A daily candlestick close below the $34,752 support level, on the other hand, will ensure that BTC continues to fall. This could lead to a crash as traders seek stable support levels. As a result, investors should be aware of the sell stops in place below $30,000, as BTC could crash lower to sweep this liquidity before triggering a bull rally in 2022. So, what factors influence Bitcoin's value? Well, Bitcoin's price is influenced by a variety of factors, and because it is worldwide money, it is susceptible to global events. Bitcoin's price is determined by the market, not by any central player. The price may differ from one exchange to the next. Another important aspect that influences the price of Bitcoin is whether or not investors desire to buy it. If there is good news about Bitcoin or other cryptocurrencies, or unfavorable news about another sort of investment, individuals may buy Bitcoins, driving up the price. However, they might sell if they hear bad news. It also doesn't have to be openly bad news to shock the market. Similarly, supply and demand principles influence the Bitcoin market. Only 21 million Bitcoins will ever be created, and investors who envision a strong long-term market for Bitcoin want a piece of the action. But keep in mind that, like with any investment, investors must conduct their own research and take expert projections with a grain of salt. Because the cryptocurrency market is still in its early stages, there isn't much evidence on which to base predictions, and unforeseeable events can have a huge impact on the market. Bitcoin is a potentially hazardous investment. Investors should consider making their own conclusions regarding their risk tolerance based on a thorough examination of all the relevant variables. The past does not predict the future, and just because trend lines suggest a bull run is on the way doesn't mean it will happen. It's critical to keep informed and conduct due diligence in such a complex, fast-changing environment. However, note that financial advisors and other experts warn against allowing Bitcoin's price volatility to influence your investing decisions. Due to a practice known as dollar cost averaging, studies have shown that investors who contribute frequently to passive index funds and ETFs do better over time. That's why experts advise investing no more than 5% of your overall portfolio in cryptocurrency, and never invest at the expense of emergency savings or paying down high-interest debt. People who invest in diversified investments like low-cost index funds, with crypto making up a modest part of their portfolio, are more likely to build long-term wealth and save for retirement. Even with crypto, experts recommend taking a set-it-and-forget-it approach. Passive investment is a viable option for achieving financial objectives. Because most people are unfamiliar with cryptocurrency, it's fine to wait and observe how things develop before putting your money on the line. We only have around 10 years of data to base crypto price projections on, and the price of Bitcoin, while potentially rising in the long run, is extremely volatile day to day. Volatility makes determining the what and why of your crypto approach difficult. Before investing in Bitcoin or any other alternative asset, consider what you hope to gain and why you want to participate in such a volatile market. This will assist you in remaining focused. And that's it for today's video. Thanks for watching. According to the analysis, do you still think we will have a bull run this year? Comment below. Let's engage. Also, if you are interested in more videos like this, make sure you like this video and subscribe to our channel. Don't forget to turn on the notification bell for more amazing videos. Goodbye. See you in the next video.